are continuing with the chapter admission, and we are now doing complete sum, full-fledged sum. We have completed with two sums in which we had done the journal entries, and with that we had prepared the balance sheet of the new firm. Here in this video, I'll be talking about the preparation of the revaluation account, partners capital account, and the balance sheet. Now let us read the question. X and Y are partners in a firm sharing profits and losses in the ratio of 2:1. Z was admitted and the new profit sharing ratio becomes 2:2:1. So we are given an old ratio and we are given a new ratio. Z brings his share of goodwill and capital 1,50,000. So he has brought in a capital of 1,50,000 and also the goodwill. The goodwill of the firm was valued at 1,20,000. The balance sheet of the firm on 31st March 2020 on the day of admission is as follows. Now here the date of the balance sheet is given 31st March 2020. That was the date of admission. Now you can see the balance sheet. It's given liability side capital of X 1,80,000, capital of Y 1,70,000, general reserve 45,000, investment fluctuation fund 15,000, creditors 30,000, bank overdraft 10,000. So the total of the liability side is 4,50,000. And if you go to the asset side, the asset side begins with goodwill. The value is 30,000. Then we have other non-current assets. The value is 2,15,000. Investment 1,06,000. Stock 59,000. And debtors 40,000. So the balance sheet tallies at 4,50,000. Now the following revaluations were agreed upon. Number one, other non-current assets were increased by 16,000. That means it was appreciated by 16,000. Stock is revalued to 50,000. That means it went down by 9,000. Now a debtor of 4,000 proved bad. Therefore, the value of debtors goes down. And you can see the market value of investment is given as 1 lakh. So the value of investment has gone down from 1,06,000 to 1 lakh. And we are asked to prepare the revaluation account, partners capital account, and the balance sheet of the new firm. So this is a question in which we are asked to prepare the revaluation account as well as the capital account and the balance sheet of the new firm. Each and every information which is given is very simple, which we will do while we will do the sum. After reading the question, we have come to know that there are two partners, X and Y, with a PSR of 2:1, and they take a new partner Z, and the new PSR becomes 2:2:1. So we have the old ratio, we have the new ratio, we also have got the goodwill of the firm, which is 1,20,000. Now let us first calculate the sacrificing ratio and see which partner is sacrificing. So first we have the ratio between X and Y as 2:1, and we have the ratio between X, Y and Z, the new partner, 2:2:1. So we'll calculate the sacrificing ratio using the formula old ratio minus new ratio for X. 2/3 minus 2/5. So over here the LCM is 15, and you can see 10 minus 6 gives us 4/50. Now next is Y. Y it was 1/3 minus 2/5. Again, if you can see very carefully over here, 5 minus 6, that is minus 1/15. Now here, due to the admission of Z, Y has not sacrificed. In fact, Y has gained. Now if this case happens, then Y will also have to bring in goodwill and give it to the sacrificing partner. Over here only one partner, that is X, has sacrificed. Now what is the goodwill of the firm? What is the goodwill of the firm? It's given as 1,20,000. Now how much is Z supposed to bring in? Z's goodwill is 1,20,000 into 1/5, that is 24,000. Now if Z is supposed to bring in 24,000, and if you see Z's share is 1/5, which can also be written as 3/15. Repeat again, which can also be written as 3/15. Why did I do this? Please understand this very carefully. X is gaining sacrificing 4 by 15, and over here Y has actually gained 1 by 15, and therefore due to Z's admission, Z had also gained 3 by 15. Now if 3 by 15 is 24,000, 1 by 15 will be 24,000 divided by 3, that is 8,000. In other words, 24,000 will be brought in by Z to give it to X, and 8,000 will be adjusted through the capital account of Y, and it will be posted to X capital account. Now let us move on with the journal entries. First journal entry we will do for the capital and the premium for goodwill brought in. So we see very carefully, the question has said that the capital brought in by the partner is 1,50,000 and the premium for goodwill we have just now calculated is 24,000. The first journal entry will be bank account debit to Z's capital account to premium for goodwill. So what was the capital brought in? 1,50,000, and premium for goodwill we have calculated as 24,000. So the total amount is 1,74,000. Now please see very carefully, this premium for goodwill will be given to the sacrificing partner, which is X. And also one more thing, Y has to bring in 8,000 rupees. So we can pass a combined journal entry for that, or we can pass separate journal entries. I'll show you separate journal entries. We can do a compound journal entry, but I'm showing you a separate journal entry. The journal entry will be premium for goodwill account debit to X's capital account, because X has only sacrificed 24,000, and we have come to this information that due to the admission of Z, Y has also gained. So 8,000 will be adjusted in the capital account of Z, X and Y. So Y's capital account will be debited. So Y's capital account debit to X's capital account. Please see very carefully, the amount we have calculated is 8,000. Okay, so we can obviously combine these two journal entries and write premium for goodwill account debit 24,000, Y's capital account 8,000 to X capital account 32,000. That can be done, but I've shown you separate journal entries. Now after that, let us see what are the various things which has been revalued. The question has very clearly stated that the market value of investment is 1 lakh, and if you see very carefully, that there is an investment fluctuation fund of 15,000 and the value of investment given in the question is 1,06,000. Now the market value of investment is 1 lakh. That means what? The value of investment has actually gone down by 6,000. It is advisable to show this by the help of journal entry. Though the journal entry has not been asked, they have asked us to prepare the revaluation account, capital account and the balance sheet of the firm. But here it is a simple advice that whenever there is a investment fluctuation fund given and there is a revaluation of investment, it is better to show a journal entry for that. So I'll pass the journal entry for investment fluctuation fund. So investment fluctuation fund account debit. See what is the value given in the question. The value given in the question is 15,000. 15,000 to investment, the value of investment is going down by 6,000. The value of investment is going down by 6,000. Therefore, we have 9,000 left, and that will be written among old partners in their profit sharing ratio 2:1. So therefore, we'll have 2 X's capital account and 2 Y's capital account. See very carefully over here, 9,000 in the ratio of 2:1. Therefore, 6,000 to X and 3,000 to Y. This is how this journal entry will be done. It is an advice to do this journal entry to show the treatment. Please understand, if the investment actually has been reduced by a smaller magnitude in comparison to the investment fluctuation fund, it will not be going to the revaluation account. It will be shown in the journal entry only. Is it very clear? I've shown that to you. Now, apart from that, there are three other revaluations. Very carefully see. The value of stock has been revalued to 50,000. That means from 59,000, it has become 50,000. And 4,000 of the debtors has proved bad. And apart from that, there is an increase of non-current assets by 16,000. So these are the adjustments which are given. These are the revaluations which are given. Based on this, we will prepare the revaluation account. I've already told you what are the revaluations. With those revaluations, let us now prepare the revaluation account and see the result of the revaluation account. Is it a profit or is it a loss? So, revaluation account. The first information which was given to us was the value of stock has gone down by 9,000. So, it will be in the debit side. To stock, 9,000. The next information we have, there was a bad debt. So to debtors, the value is 4,000. Apart from that, there was one more information given that the value of non-current assets increased by 16,000. Therefore, we'll go to the credit side by non-current assets, and the value is increasing by 16,000. So we have written it in the credit side. Now see very carefully now. In the credit side we have 16,000, in debit side we have 9,000 plus 4,000, that gives us 13,000. That means the credit side is heavier than the debit side. Therefore, there is a profit on revaluation of 3,000. Okay. So to profit transfer 3,000. I hope you know that the profit is transferred to the capital account and there are two partners X and Y. And what was the PSR? If you remember, the PSR was 2:1. So 2,000 to the first partner and 1,000 to the second partner. This concludes the revaluation account. The total of the revaluation account is 16,000 each. Okay, you can see over here 16,000 debit side, credit side. This concludes the revaluation account. After preparing the revaluation account, the next thing which the question has asked us is to prepare the capital account, and then we have to go ahead with the preparation of the balance sheet. After the preparation of the revaluation account, let us now move on to the preparation of the capital account with the informations given in the question. If you remember very carefully that the capital balances of the two partners X and Y was 1,80,000 and 1,70,000. There was a general reserve of 45,000 and it was distributed in the partners in the ratio of 2:1, that is 30,000 and 15,000. Apart from that, there is a journal entry which we have done for the distribution of investment fluctuation fund. Now here there was only X who had actually sacrificed. Therefore, X had got the premium for goodwill from Z and X had also got a goodwill from Y, which was done through a capital transfer entry. Apart from that, there was a profit on revaluation of 3,000, 2,000 and 1,000. If you remember the balance sheet of the firm, in the balance sheet of the firm, there is a goodwill given in the question, that is 30,000, which will be distributed among the partners X and Y in the ratio of 2:1. And after that, we will see that the new partner has also brought in 1,50,000 as the capital. With these informations, we'll prepare the capital account and find out the balance of the firm. So let us start with the capital account. We know that there are three partners X, Y and Z. We'll start with by balance. Brought down, we have X, Y and Z. And what are the capital accounts? 1,80,000 and 1,70,000. This was the capital balance. The second piece of information is general reserve. And what was the value of general reserve? 45,000. And what was the PSR? 2:1. Therefore, 30,000 and 15,000 respectively. 30,000 to X and 15,000 to Y. After that, we'll do the entry for investment fluctuation fund. by investment fluctuation fund. See very carefully, 6,000 and 3,000 respectively. Next information which we have is the goodwill which was brought in by the new partner, and it was 24,000, and the only partner who sacrificed was X. Therefore, by premium for goodwill, 24,000. Next one, by Y's capital. Why have we passed this entry? We have passed this entry because Y had benefited due to the admission. This entry is passed because Y had benefited due to the admission of X, due to admission of Z, and therefore over here 8,000, and this will have a corresponding entry. Please don't forget that, to X's capital. And if you remember, there are three partners, X, Y and Z, and this amount will be in Y's account, 8,000. Apart from that, if you remember, there was a goodwill also, and the value of goodwill was 30,000, which will be written 20,000 and 10,000 in the X and Y's account, because they are the old partners, and only old partners will get the benefit of anything which is there in the balance sheet. Okay, now apart from that, we can see that there is a profit on revaluation of 3,000, which will post over here by revaluation. We can write profit, and the amount we can see over here is how much? 2,000 and 1,000 respectively. Last entry by bank, and it is 1,50,000, which was brought in by the new partner. This concludes the capital account, and now we'll do the addition, and finally we'll do the balancing. So we have 1,80,000 plus 30,000, that gives us 2,10,000. 2,10,000 plus 30,000 gives us 2,40,000. 2,40,000 plus 8,000 plus 2,000 gives us 2,50,000. Total over here is 2,50,000. See very carefully, we have 20,000 over there, so 2 balance, carried down, 2,30,000. So first partner's balance is 2,30,000. Let us do the total of the second partner Y. 1,70,000 plus 15 is 1,85,000. 1,85,000 plus 3 is 1,88,000 plus 1 is 1,89,000. So here we have a total of 1,89,000. 1,89,000 minus 18,000 gives us a figure of 1,71,000. Repeat again, 1,89,000 minus 18 gives us a figure of 1,71,000. Last partner, there is nothing in the debit side, therefore it will be 1,50,000 only. That is the amount of money brought in by the new partner. We will conclude it by bringing down the balance. By balance brought down, and 2,30,000 first partner, 1,71,000 second partner, and 1,50,000 third partner. These three numbers, these three balances will help us in preparation of the balance sheet of the firm. Now we'll start off with the last part of the sum, which is the preparation of the balance sheet. And we start with other non-current assets. And what was the value of other non-current assets? If you remember, it was 2,15,000. 2,15,000. And what has happened to this? It has increased by 16,000. So add appreciation, 16,000. Outer column 2,31,000. Outer column 2,31,000. So this is the first treatment of the other non-current like assets which we have. 2,15,000. There is the appreciation which has been shown in the credit side of the revaluation account, and therefore 2,31,000 in the outer column. Apart from that, there is information about investment. Investment, if you remember, the value was 1,06,000. The market value has become 1 lakh. So over here less investment fluctuation fund. Please see very carefully. We have shown that over there. So the outer column figure of investment will become 1 lakh, which is stated in the question, and the market value of investment is 1 lakh. Next information which we have is the value of stock has gone down by 9,000, and also there is a bad debt of 4,000. So the next information we had stock, if you remember, value was 59,000, and the decrease is less decrease 9,000. Please don't write depreciation over here. Stock does not depreciate. The value of stock decreases or increases because it is a current asset. Current assets and liabilities do not depreciate or appreciate. They either decrease or they increase. Okay. The next one which we have is debtors. And if you see, there is a bad debt of 4,000. What was the value of debtors given in the question? It was 40,000, and there was a bad debt of 4,000. So 40,000 less bad debts 4,000, outer column 36,000. Outer column 36,000. After doing all these entries, the last entry which is required in the asset side is the cash at bank. If you remember, over here we have a bank overdraft of 10,000 in the question, and we can see that the new partner has brought in 1,50,000, and he has also brought in a goodwill of 24,000. So the total amount of money brought in by the new partner is 1,50,000 plus 24 is 1,74,000, but there was a bank overdraft of 10,000. So the treatment will be very simple, right? Bank account and 24,000 plus 1,50,000 minus 10,000. Repeat again. Why minus 10,000? Because it was a bank overdraft given in the question. And now if you see very carefully, the amount which will go into the outer column will be 1,64,000. How did I get it? 24,000 plus 1,50,000 gave us 1,74,000 minus 10,000 gave us 1,64,000. So these are the figures which are there in the asset side of the balance sheet, and that will help us to find the total of the asset side of the balance sheet. Now, what are the items in the liability side of the balance sheet? There is only one item, that is creditors. Apart from that, there is the capital balances. So we'll take the capital balances from the capital account. So the three partners X, Y, and Z, and you can see the capital balances: 2,30,000 first partner, 1,71,000 second partner, and 1,50,000 the third partner. Please see very carefully. 1,71,000 second partner, 2,30,000 first partner, and 1,50,000 the third partner. Add up all the three. The total which we get over here is 5,51,000. 5,51,000. Apart from that, we have only creditors. And creditors does not have any revaluation. The value of creditors is given to us as 30,000. The value of creditors is given to us 30,000. Now, if we add up the liability side, we get 5,81,000. Repeat again, we get 5,81,000. Now let us see the total in the asset side. 2,31,000 plus 1 lakh is 3,31,000 plus 50,000 is 3,81,000. 3,81,000 plus 2 lakh gives us 5,81,000. So the balance sheet tally is at 5,81,000. If you see very carefully, this question had asked us to prepare the revaluation account, which we have done, and the result of the revaluation account was a profit of 3,000. Then they have also asked to prepare the capital account, which we have done, and we have found out the balances of the partners. And finally, the question had asked us to prepare the balance sheet, and the balance sheet has tallied at 5,81,000. I hope you have understood the calculation. Keep watching my channel. Don't miss any of my lectures. And if you have not yet subscribed my channel, please do subscribe it and press the bell icon.